Hello and welcome to Fintech Insider Insights. I'm Ross Gallagher, venture lead here at 11FS. In today's episode, we are asking, is debt the last taboo of financial services? As an industry, financial services can talk endlessly about positive user journeys and financial enrichment. But when it comes to the tough topics, it's a little more challenging to open up. No topic seems more taboo for the financial services industry than the topic of debt itself. But with people in the UK owing £1.8 billion as of January 2023, and some 340 million Americans currently carrying some form of debt, this is a subject far too important to ignore. So in this show, we've put together a panel of amazing experts to discuss why is debt such a taboo subject, how do you help people avoid unworkable debt, and how do we improve the debt collection process? We'll discuss all of this and more in today's show. But first, a few brief messages, so please don't go anywhere.
This episode is sponsored by Blinkist. The Blinkist app offers distilled content from over 5,000 non-fiction books and podcasts in an audio-first experience, so you can easily fit them into your day, letting you learn new things all on the go. Discover friend of the show Dan McCrum's Money Men, his journey to exposing the Wirecard scandal, all within 20 minutes. Sounds pretty good, huh? Well, right now, Blinkist has a special offer just for you, our Fintech Insider listeners. Go to blinkist.com/fintech to start your 7-day free trial and get 25% off a Blinkist premium membership. And now for a limited time, you can even use Blinkist Connect to share your premium account with a friend or partner and get 2 premium subscriptions for the price of 1. That's Blinkist, spelt Blinkist, blinkist.com/fintech.
Buying a home is the biggest and most significant purchase most people make in their lifetime. And it doesn't matter where in the world you're buying, the process is rarely easy. In our latest report, experts from our 11FS Ventures team look at why the home buying process is broken, how we can fix it, and the massive commercial opportunity it presents for banks and fintechs. Download your free copy at 11fs.com/homebuying. That's 11fs.com/homebuying.
Okay, let's get started. As ever, I am not alone. I am joined by a panel of amazing guests who can come and shed some light on this super interesting topic. So first off, it's a Fintech Insider debut for Neil Costello, UK Marketing Director at Lowell. Neil, listen, thanks very much for being here. Maybe you could start just by briefly telling our listeners both about yourself and a little bit about Lowell.
Yeah, and thank you very much for the very kind invite. So, Neil, I've been working Lowell for a few years now. Previous to that, helped set up the fintech bank Aspen in the UK, and then many years under the Aviva umbrella, looking after several brands there. Lowell is probably one of the biggest brands in the UK that people don't know about. So we've got around 7 million customers, and we're at the forefront across Europe around debt purchasing and debt servicing. So we've got about 25 million accounts across Europe, and if we translate that into the UK, that's about 7 million customers. And over the years, 1 in 5 of the UK adult population has been a customer of ours. So pretty big.
Yeah, you've got a really unique, I suppose, understanding of this space, Neil. So thanks so much for coming on and sharing your expertise and your insights. So we also now have a Fintech Insider debut for Siamac Rezeaizadeh, VP of Product Marketing and Insight at GoCardless. Siamac, welcome. Maybe again, you could just tell our audience a little bit about yourself and a little bit about GoCardless.
Love to, and super happy to be here, Ross. As you said, my name is Siamac Rezeaizadeh, and I've been at GoCardless for nearly 6 years now, lately as kind of leading both our product marketing and insights teams, which kind of gives me, I think, really 3 roles, really. Trying to understand the pains of our customers, trying to work with our product teams to roll out products and features that our customers actually want, and then trying to make sure that our customers understand the value they get out of what they buy from GoCardless. And at GoCardless, we fundamentally believe that bank payments are the best way to get paid. We've been going for about 12 years now, and that kind of insight of focusing entirely on bank payments has been with us since our inception. We help businesses collect both recurring and one-off payments, without the need to, chase for payments, without, investing huge amounts of time and effort and ultimately stress in kind of chasing payments and chasing down debt, and without expensive fees as well. And kind of the way that we operate is we look at how do you collect payments directly from the bank account, and then we layer on top of that things like payment intelligence to predict things about your payers or your customers that might help you collect payment, or leverage insights from their bank accounts directly using open banking to understand them and make faster and better decisions. We have about 75, 80,000 customers or so, and process tens of billions of dollars a year. So hopefully can provide some insights both from what our customers who may be chasing debt may be looking for, but also a lot of our think of it as payers, people actually paying, and how they like to think about both making payments and not being able to make payments as well.
Yeah, no, absolutely. And look, I think, again, some sort of unique and interesting implications on the sort of bank payments and sort of, I suppose, more broadly open banking and all of that sort of stuff on this space as well. So I think we'll get into that as we go through the show. But again, thanks so much, Siamac, for coming on and sharing your insights. And then last but by certainly no means least, we have Karen Andres, Director of Policy and Market Solutions at the Aspen Institute. So Karen, listen, great to have you again. Maybe you can just tell us a little bit about you and a little bit about the Aspen Institute.
Sure. First, thanks so much for having me. I'll be the representing America over here. So the Aspen Institute Financial Security Program is part of the broader Aspen Institute, which is a Washington, D.C. based policy studies organization. Some might call us a think tank. But at the Financial Security Program, we're focused on making financial security a top national priority. And it sounds a little bit strange, in the wealthiest nation in the world. Financial insecurity is actually the majority experience. And so we aggregate research and data and engage and partner with leaders across industry, across advocacy, nonprofits, and also policymakers to seek solutions that will improve the financial security of Americans. As a note, we started our work in the field of retirement savings and in fact have a many years long transatlantic partnership with Nest UK. And so we're quite familiar with the savings landscape and investing landscape in the UK. But debt is the other side of the balance sheet, right? So you can't have a conversation on either side of the Atlantic about wealth building, wealth gaps, about asset building without also talking about the liability side. And so we've done a good deal of work on the US side about all the forms of consumer debt, how we got to the point of indebtedness, what are the drivers and the dimensions of it, and then done a little bit on the solution side. So happy to be here and be part of the conversation.
Yeah, and look, we're really happy to have you. And I think you're absolutely right. And actually, I like the balance sheet analogy. I think, most consumers' experience, I expect, they would tell you that it's a lot easier to get into debt than it is to sort of build wealth and all of those sorts of things. So looking at both sides of the coin, like you said, I think it's just so important. So yeah, Karen, look, great to have you, and looking forward to sort of digging deeper, shall we say, as we go through the show. So those are our guests. Let's dive in. Let's lay out the taboo around debt collection, and that whole side of the industry. So Neil, look, maybe I'll come to you first, just for a little bit of context. I mean, you're sort of very much directly exposed to this in the sort of UK and European markets, as you said. Why do you think, I guess, conversations, if we boil it down to its very essence, why are those conversations so difficult?
I think of it to position where we are in the UK. So let's be frank, and we deal with problem debt. So we buy debt from many of the biggest brands in the UK who can't find or don't want to invest in finding the consumer who's found themselves in problem debt. But to answer the question, I think it's more fundamental than that, because we've got very, very strong evidence for the link between unmanaged debt and poor mental and physical health. And it's almost a two-way causation. So if you're in debt, in problem debt, you can end up in poor mental physical health. Likewise, if you're in poor mental physical health, you can end up in problem debt. And I think for me, there's certainly here in the UK, there's a feeling of almost hopelessness and shame that inhibits many of our customers and many people who are in this situation from seeking emotional, practical support. and it's for us as a brand and a sector and for the regulators to encourage customers to engage in the problem debt that they have, because a business like ours is a fundamental part of the credit cycle.
Yeah, absolutely. I mean, Karen, I could see you nodding to some of Neil's point. I guess, to your mind, what are some of the causes of sort of debt, unworkable debt, problem debt, and I guess how much of it boils down to, yes, I suppose sort of a lack of financial understanding, but I suppose to Neil's point, I guess some of those sort of legacy emotional issues around actually being comfortable, being open and sort of talking about these things and actively seeking help.
Yeah, it's a great question. I think level setting on kind of how we got ourselves to the level of indebtedness in the US, and in some ways it's different from the UK. So we have 3 in 4 households in the US carry some amount of debt. It's a fact of life, right? Debt has become a fact of financial life in the US. And I think we have to acknowledge a couple of things. One, our incomes, wages in the US in real terms, have not kept up with the major costs of living in the United States. We talk about inflation like it's been low, but that's the CPI, right? And when we talk about the major buckets, right? So rent, the cost of higher education in the United States, which I'll get to in a second, that we finance that quite differently than in Europe and the UK. The cost of medical care, again, we've made a different set of policy choices than other countries have made there. And so we have a stack of childcare. Oh my goodness, childcare before kids go to elementary school. So the stack of expenses is now higher than the median income. And so we are, the common experience in the US is that people are now sort of operating at a deficit all the time. The net result of that is we actually have 1 in 10 households who live in a state of net debt, of negative net worth. And that's going to be disproportionately households of color in the US. So that's like the sort of the basics of how we got there. So I think that's always important to level set that. Are there people who struggle to manage money? Yes, but that's not the main driver of it. I'll also say, just to zero in on what we call student loan debt, right? Financing college or university, well, university for us, college or university, the same thing for us, and medical debt, right? Our private medical insurance means that medical debt is actually is the most common form of debt collection lawsuit in the US is for medical debt. These are hospitals suing people. So just to say, I think that's just the landscape of kind of how we got here. It's really a set of policy choices and labor wages not keeping up with that stack of expenses.
It's a really helpful breakdown. And actually, I suppose for me, one of the things that stood out was, obviously, everybody now is talking about inflation, right? Because inflation is higher than we've seen in a generation, right? But the point that you made that's actually so interesting is that CPI, and that's typically a basket of sort of regular household goods, right? So that's what we're talking about. What people often don't sort of think about then in that context is the things like rent. It's things like childcare, like you mentioned, that as a proportion of people's income over time has skyrocketed, right? So that's a much higher proportion. Siamac, I mean, we're talking about sort of inflation perhaps historically being low, but those things climbing as a proportion. But how much more of an issue is this today when we're talking about inflation just across the board, also higher than it's been, like I said, in a generation?
Yeah. Before getting started, I think I just wanted to touch on another side of the story when you said why conversations about debt so difficult. I think there's another side of that story that's important to recognize, and then we'll happy to come on to that part as well. I think that when we talk to business owners, in particular small business owners all around the world, kind of off the top of my head, I'm thinking about ones in the UK in particular. And we asked them about, what do you do when your customers owe you money, right? Like that's the other side of debt and the other side of the conversation. And, we know that about a quarter of British small businesses, for example, feel completely uncomfortable and unprepared to have conversations with their customers about money at all in a business context. And interestingly, rises to almost a third when those small business owners are women, right? So like you have a real substantial number of people who are owed money and don't know how to have that conversation for with their customers about, okay, well, how do we think about this debt? How do we think about kind of paying for kind of the services that I've delivered? And interestingly, over 7 in 10 businesses would actually be willing to forego up to 10% of their revenue just to avoid that conversation entirely, right? Which speaks volumes to the fact that the conversation is so difficult, right? And not just a conversation around debt, but a conversation around dealing with debt. Even if you're not the one in debt, if you're the one who's actually owed the money in the first place, it's not a comfortable topic. People don't have the tools to deal with it, and are, happy is probably the wrong word, but willing to kind of give up on services that they've delivered just to avoid that conversation. And I think that's almost a shocking number, right?
Yeah, it speaks to a sort of, I guess, like an incredible psychology, right? That sort of surrounds debt, like on both sides. Which actually, I guess, Neil, coming back to you, I'm interested because I guess, when you're dealing with people that are in sort of difficulties with debt, I suppose you're engaging with people that typically are in some form of personal crisis, right? So how do you sort of manage that?
It's a challenge. Let's not face away from that. If going back to kind of the cost of living crisis that we're all going through at the moment. So in the UK in particular, the older deciles and the poorer deciles are being disproportionately hit by the economic factors, and we face into that by treating people with dignity, having a very sustainable approach to affordability, so we don't charge interest or anything like that, and being very, very careful with customers that are in vulnerable situations. So whether that's providing breathing space, whether that's setting up very, very long-term plans at low cost to help them get back into the credit cycle, which, to be fair, is most of the reason why somebody engages with us. So they'll avoid a debt with, again, some of the biggest brands in the UK, and then it will come to, I want to buy my first home, or I want to start taking credit out again, and then they realise the damage that the problem debt has done on the credit score. And you have to be sensitive. And as a brand, and as a part of the financial services sector that has only relatively recently been regulated in the UK, and still there are some out there that are unregulated and cast a longer shadow, dare I say, on the rest of the sector in terms of how you behave with customers. I think it is all about that dignity and understanding of the circumstances that made a customer get into that situation. So you'll have a lot of businesses that are driving heavily towards digital in financial services, understandably so. But from our perspective, we think it's vitally important we have that conversation so we can deeply understand the circumstances that inevitably was that one trigger or tipping point that tipped somebody into problem debt.
Yeah. And it feels like, obviously, like I said, a personal crisis, it feels like that sort of like that human interaction, that human touch point would be more comforting, would make a big difference versus a sort of digital interaction.
Vital, yeah.
You can pick up all of the nuances and all that sort of stuff. Karen, I'd like to close this section with you. I know you guys, obviously, as a sort of nonprofit, are doing great work in this space, but who do you think, where do you think the responsibility lies, right, around sort of opening up the conversation around debt and trying to engage people before it gets into a point of problem debt?
Yeah, I think I was turning this question over in my mind in advance, and I think there are a number of ways you can think differently about problem debt, right? So I think first to sort out that there's debt that comes from a loan, and there's debt that comes from an unpaid bill, right? And those are two different things. And even across those, the bill, and then there's within the debt from loan, there's secured and unsecured. And I think in the US context, I think what we're sort of focused on is that, when a debt goes delinquent and the creditor, rightly so, right, there needs to be a collection system. To Neil's point, there's dignity and fairness and consideration, right? But also the creditor needs to find a way to collect to the extent that they can. You have to have, that's essential for a well-functioning credit market, right? But in the US, especially when it comes to unsecured loans, especially credit card and medical debt, these very often end in a lawsuit that can actually end in imprisonment. And it differs. Debtor's prison, not actually dead in the United States. And it's a little, there's some technicalities. It's actually, found in contempt of court for not responding to a summons but the fact is you can actually be put into jail as part of a debt collection lawsuit process. And I think that's a little shocking to hear in the United States, but we see that there's a real, to ensure the dignity and frankly, the best outcome for everybody, we think that there's some real reform that needs to happen in the court system that would ensure a much fairer process that would level the playing field a bit between creditors, whether those are original creditors or debt buyers, and the defendants or alleged debtors. I don't know to what extent that's an issue in the UK, but certainly we have a 70% rate of default judgment on those cases, which tells you that these are cases that are being filed without ever being. There's no proof required. The defendant doesn't even engage in the process, and we have 10 million people a year who have been sued, with 7 million of those basically being found liable for that debt, whether they owe it or not.
Wow, they really are eye-opening statistics, right? And I think difficult to engage people in a positive conversation around debt when the process, or at least the outcomes, can be so punitive, right? So I guess, right, so having sort of set out the current taboo, I guess, and it's a really good segue, Karen, from your point, let's look at maybe how the industry works on sort of managing unworkable debt, right? So how do you help people, I guess, avoid it? Maybe, Siamac, how easy is it to sort of spot when debt might be becoming unworkable in the first place? Or I guess that's the starting point.
Yeah, absolutely. I mean, so I'll come at this question, I think, from the GoCardless kind of technology provider angle, and are where the technology solves everything hat, even though we all know that it doesn't quite, right? But I think there's a couple of things certainly that we do, or we help our customers do, that certainly helps with kind of managing, spotting, identifying these sorts of things. I think number one is, and maybe we'll touch on this a little bit later, I think the idea is, keeping an eye on how much your end customers can truly afford to kind of take on debt, take on services, pay for things, buy things, trying to figure out exactly what they can and can't afford, and kind of offering products and services and loans that respond directly to that. And, we think that data provided through open banking, so directly from the customer's bank account, is a great way of understanding and doing that, right? So not relying on kind of them saying, hey, yeah, that's fine, or, maybe not even credit scores per se, but actually looking to the bank accounts and saying, all right, well, this person clearly has an income of X per month. They spend Y per month on this type of service, Z per month on this type of service. It can be pretty clear going back over the last, 2-3 years to build up a pretty accurate income verification picture, to understand what they can and can't afford. You can build up a pretty clear kind of credit risk picture to understand how money is being spent. Right, people are entitled to spend their money however they want, but some behaviors are inherently more risky than others. And building up that picture with the consent of the end customer themselves to say, okay, well, have access to my bank account, see what I'm spending money on. You can judge my income levels. You can judge what I have, and then use that to understand what's truly, truly affordable for that individual. So that's kind of one area. Certainly on the GoCardless side, we work with businesses, in particular fintechs, in particular kind of lending companies, to kind of give them really, really smart, really, really fast access to that level of information. And then on the second side, I think ideas around how. And it's probably less true on the kind of loan side and more side, to Karen's point on the, haven't been able to make a payment on something that's owed, a product or service that you purchased, and you've missed a payment. I think whilst I do agree that personal touches are phenomenal, I think what's really the answer is not necessarily personal touch; it's responding in a personal and unique way for the individual, right? So. One of the things one of the ways you can certainly approach these things with masses and masses of data is to look at, okay, let's look at, billions of dollars of kind of payment dollar data, like billions of dollars of recovery, payment failure data points and saying, okay, Karen's payment has failed this month. Instead of trying to recover that payment on the 10th of April, we predict that actually she still won't have money in her account on the 10th of April. So instead of just randomly retrying on the 10th of April, which by the way will incur an additional fee from her bank for that, we actually predict that the best time to retry will be on the 15th. Whereas Siamac actually never has money in his account, so don't even bother retrying his payment. Whereas Neil, you should retry it on the 20th of April, for example, right? And that way you get a real kind of customer-centric approach to kind of recovery, which I think it reduces these levels of unworkable debt because your kind of recovery processes are based around the individual. So I think technology can help, I think, on two of those areas to spot and reduce unworkable debt. The first area around understanding the customer, and the second area around using machine learning and data to have a real customer-centric approach to that debt.
Two incredible examples. I love the one about that bit about just being that little bit more intelligent, so that you're stacking the deck in the favor of consumers rather than, it's kind of the point we talked about at the top of the show, this idea that it's easier to get into debt than it is to build wealth. Well, if you've got a combination of those little bits that are just making things easier, and like you said, you're not incurring additional fees and all that sort of stuff, obviously that will have a massive benefit. The other point I think about that real-time affordability, that I think has the potential to be an absolute game changer, right? Because you can actually share, say link all of your accounts. You can give a loan provider a holistic view across all of your accounts so that they can actually assess affordability in terms of like where you stand in that very moment. And based on that, they can give you sort of like fairer prices, borrowing rates, all of that sort of stuff. So again, I just think that's a game changer. It raises an interesting point, maybe Karen, around sort of from a consumer's perspective, actually taking on debt. And I guess it comes back to the financial literacy piece, understanding sort of responsible practices around taking on debt. How do you think that you sort of, you encourage consumers there?
Well, to go back to Siamac's point, I just to say it's like seeing the future. We don't have an open banking regime yet in the US, and we're all sort of enviously watching as the ability to do kind of really personalized cash flow underwriting as that takes shape, right? And I think it's a little bit connected, Ross, that heretofore, it's just been some version of the 4 Cs, right? Of the character, whatever, the old school way. And then we've gotten ourselves to a credit score, which is, it's only as good as it is. But now, we are unlocking this whole set of tools, not only on the lending side, but on the saving side, on the next best dollar. Like, I'm, despite sounding like the number one consumer advocate in the United States here, I actually am super bullish on what technology can do. I think it has to be balanced with some protections, right? I mean, when I sort of hear that model, I think like, wow, that could totally revolutionize. And we're studying cash flow underwriting here in the US also, but that could revolutionize underwriting and giving people access to the right amount of credit, and not just the right amount of credit, but the way the payment is restructured. And is there flexibility, to match the income volatility? It opens up a whole world of customization. I think that to put that consumer protection hat back on, when we have visibility into all of the accounts, and I don't know about the UK, but in the US, we have the ability to garnish wages, right? When a lawsuit is found in favor, I'm going all the way to the end, right? Kind of the worst case scenario, which is where many of the lowest income Americans find themselves at the sort of the tail end of debt collection. Have to make sure that there are enough exemptions and protections for their money so that that the collection of a debt doesn't put them further into poverty. And it's opening up these incredibly powerful tools of data aggregation and open banking. It seems we just have to be extra cognizant that we now have the power to not only create a great outcome for the borrower, but also for the collector. Right now, we can see when is the most advantageous time, and are you scooping out that money prior to their red check coming out, right? And then you have to be careful about the payment hierarchy and what's actually, not making sure that we're not leaving a borrower in a state of destitution where not only can they not repay that debt, they also can't make rent or pay for other essential needs. And I'm bullish about the technology. It's a both and.
No, I completely agree. Neil, what are your sort of views on, I guess, open banking in this space?
Yeah, it's really interesting. So I've my career has taken me through investments, pensions, insurance, into banking, and now into debt collection. So maybe it's estate agents next in the UK. Who knows? But it's very mistrusted. Let's say our part of the sector, and sadly so, because certainly in the UK, the consumers who are in the problem debt cycle have been in it for 10, 15, 20, 25 years. Our research has empirically proven it. And so they've come from a time pre-regulation where it was people banging on your door and taking your car off the drive and that kind of stuff. And so there's huge, deep mistrust. Now, we did do an open banking pilot, and what we found was, and there's a little bit of financial literacy going on here as well. So, our customers have a reading age of kind of 6 to 7 in the UK. Are they prepared to make that step when it's a debt collector to connect their bank account to us? And we just couldn't make that work. Open banking is brilliant, but I think it's for certain sectors of financial services. And at the moment, my gut feel is when you're trying to overcome the deep mistrust in our part of the sector in the first instance, trying to encourage a customer to connect their bank account was too far a hurdle to overcome just now. Maybe in the future, we'll see.
Yeah, look, I think it's a really good caveat, right? And I think none of this is a straight line. None of this is sort of like one size fits all. And I think certainly, Neil, where you are, I think it's sort of meeting people where they are, isn't it?
Yeah, totally.
Neil, would you mind if I ask a question?
Sure.
What were the incentives in that case for one of the individuals you were, trying to collect from, in that sense, to actually connect their bank account? I'm just super interested as to how did you position it as a thing to do?
So from a regulatory perspective, and importantly, we have to get a really good and detailed view of income and expenditure. Now, historically, that has taken nearly half an hour on a phone for a customer. Imagine, if somebody had asked me what my council tax bill was and my water bill was and all my energy bills right here, right now, when I make a phone, I wouldn't have a clue. And I guess the vast majority of the population probably wouldn't either. And so you're put on the spot there to some extent to try and give us a view of income and expenditure, which is important from a regulatory perspective, and for us to get a sense of, is there a level of vulnerability and should we be pursuing this or not? What we wanted to understand from an open banking perspective, would that cut down the time for a consumer to be able to, dare I say, not spend a half an hour on the phone with us and condense it to 5 or 10 minutes because they've connected it. But again, going back to where we are in the sector, there was still just such a big hurdle to go, well, you've found me, in air quotes, now you're expecting me to connect my bank account to you, and that trust hurdle was too big to overcome just now.
Fascinating. Thank you.
Yeah, really is. All right, we're just going to take a quick pause here and we'll be back with you very shortly.
A lot of you know 11FS for our chart-topping podcasts, our events, videos, reports, and a bunch of other cool stuff that we do. But what a lot of you don't know is that this is just all our side hustle. We do so much more than that. At 11FS Ventures, we're partnering with ambitious businesses around the world to design, build, and launch truly digital financial services. We are building banks, shaping new propositions, and growing existing offerings that change the fabric of financial services. And our design, research, strategy and engineering experts are working to improve your customer's relationship with money. To find out a little bit more, check us out at 11fs.com/ventures.
Okay, welcome back to the show. So, as previously touched upon, debt collection is an unavoidable part of the industry. So, let's look how we make it more humane and more responsible, as we've been discussing. So, maybe Neil, if I come back to you again on this one, what are some of the practices that Lowell is looking to avoid when it comes to debt collection?
Great question. I'm in a strange position as a marketing director in the UK where our customers don't want to be a customer of ours. And ultimately, if I've done a good job, then they won't be a customer of ours again. The cycle of debt collection will mean that we will always be around commercially. So you have the balance of commercial versus customer. But again, it goes back to those emotional symptoms of debt. And we and I personally believe that as a brand, if you're encouraging somebody to engage who is disengaged for what could be many years before we buy the debt, there's a sense of isolation, there's a sense of being threatened, there's a sense of being accused almost, and there's a huge level of vulnerability. So I think, again, to previous points, it's really important that you provide a level of service and capability that engenders that trust. So we give away free credit scoring in our app. We give away a free benefits calculator for customers to understand where they can find the money to help pay off the debt. And the ultimate outcome for me is that if I can look back in a few years and go, hundreds of thousands of people got out of debt sustainably and for good and didn't come back into our part of the sector, that is kind of job done. And the byproduct is, the commercials come through as well. So I do personally think it's deeply understanding the emotional impact of debt on people, which I don't think the sector has done historically.
I think it's nice, Neil, as well, because it's clear that you guys are taking a sort of longer term focus with that sort of like customer in mind, right? Because it would be easy just to focus on getting the debt paid, but actually, from what you describe, it's more about sort of giving people, I suppose, the tools that they need to build better financial habits and behaviors and not end up in that situation again, right?
And again, balancing that commercial versus customer lens. We know that if a customer can make up the first 2 or 3 payments of their problem debt with us, they generally pay the whole lot off. But if they miss that first or second payment because of the volatility in the finances and they can't find the £5 or £10 at the end of the month, then it's really, really difficult for them, particularly in the climate that we're in at the moment. So anything that we can do where we go, here's some tools and services that can help you find money that you may not know you were entitled to, is only going to be a good thing. Yeah,
it's interesting, isn't it? I mean, actually understanding those triggers is a really powerful thing, right? Because Siamac, you talked about the potential role in like with AI and sort of like the technological intelligence to build in better sort of like rules and all of that sort of stuff to sort of not force customers into situations that they don't need to be in. But I suppose, Karen, like what Neil just said is that it's sort of, for me, debt's ultimately a human problem, isn't it? Really. And you're going to react to that emotionally and sort of on a human level.
It is a human problem. And I don't think we've done a great job to date in the US of taking that human experience, but looking at the systemic drivers of it. And I think we saw, many countries in the world, we had a big policy response during the pandemic, right? We injected a lot of cash into our economy and in the form of payments directly to households. And what we saw during that time period was people went and paid down their debt, right? When they had free cash flow, they paid down their debt and they started building up savings. And so I just want to put out there, especially for our US listeners, that we actually have evidence of what happens when people have enough income and when they have routinely positive cash flow, that it's not that they don't know what to do, right? They know what to do. They'll start paying down the debt. So there's sort of there's a systemic opportunity for us to help people respond at a human level to a systemic problem. I also think that, there's a lot of, in addition to what I've talked about before around, there's reform at the federal level, there's reform at the state level we can do vis-a-vis wage garnishment, bank account seizure, courts, all of this. I think sort of hovering in the middle here, and I'm really curious about your all's experience in the UK. There's a big information asymmetry problem in the debt collection process, right? So 75% of debt that goes delinquent in the US is to like 9 different debt buyers. That's who buys it. And they buy it for as little as 5 cents on the dollar. But these companies have names. The people contacting individuals have names that these people have never heard of. Like, who is Portfolio Recovery Associates? I don't know that organization. I had a credit card with that bank, or I had a cell phone, I had my telecom bill with Verizon, but I don't know who Portfolio Recovery Associates is, right? And so there's a lack of transparency. Who owns my debt? How much do I really owe? Is there an opportunity to negotiate or not? I think we have, in the spirit of building transparency in this process. I've actually seen some really interesting tech platforms being built to allow for negotiation between the debtor and whoever owns the debt, whether that's the original creditor or a secondary debt buyer. I think that is sort of an intermediate step we need to take around driving transparency. And like, what if there was a Kelly Blue Book for debt, right? I can look up what my just for example, what my 2015 Toyota Sienna minivan is worth, what that asset is worth. What if I could look up what that asset is worth to my bank? And then and what do people normally pay on those sorts of debts, right? Like, there just seems to be a lot of information that one side of the sort of transaction has that the other side doesn't have access to. And I wonder what role technology can play in rebalancing some of that asymmetry, especially to curb the abuses that we know are in this system in the US.
I completely agree. I think that's such an interesting point, and actually really interesting term, information asymmetry, because it's exactly what I was thinking when we were talking about credit scoring and actually how open banking is starting to change that, right? Because I think credit scores, they're a complete black box. I, as a consumer, do not really understand what goes into that. And then banks have their own models that, a credit score is just a single little part of that model I've got. Whereas, Siamac, the sort of the model that we talked about, that sort of like being able to share your real-time information with providers and getting the reward of sort of fairer, more accurate loans and all of that sort of stuff. Again, that just strikes me as a game changer sort of moving forward.
It's personalization effectively, right? That's happening in lots of different industries, from personalized medicine through to, hopefully debt and lending, right? If you can provide quick, easy access to your information so that lenders in this case can make a very personalized proposition for you based on your spending habits, your saving habits, and so on, you'll ultimately be the net recipient of that. I think as well, what open banking can do from a data side, as well as helping lenders, as well as helping people who are providing services, can help consumers much more easily manage their own money, right? So understand more easily at a touch of a button what they are spending, right? What they're spending money on, what they're not spending money on, what the opportunities for saving and paying down debt is. So to Karen's point, when people have the cash flow, I find that fascinating. When people have the cash flow, they do the responsible thing, right? So how do you provide the opportunity for them for people to either get the cash flow or see the cash flow? And I think that open banking from the data side has an opportunity to do that too for consumers. And then on the payment side as well, open banking provides a real opportunity for consumers to just set up, when they do have the cash flow, to set up automated, leave and forget sort of processes whereby, great, if I've got, £10, £20, €30, $100 free at the end of the month, sweep it into this account, pay down that debt, don't even tell me about it, right? And those things together, better understanding of the consumer from the business side, better understanding of your own finances, and then the ability to just automate the paying down of debt when cash flow is available, I think presents a fantastic opportunity.
I just have to jump in. It's so cool. Like, that's the opposite of, in the US, we have a fintech called Digit. I don't know if you guys are familiar with Digit, but it's the same functionality, right? It's just putting it against the liability side instead of the asset side. And I am like, what if there was a thing that could do both at once and help you get the right mix, right? Because there's thinking broadly about the household need. Sometimes people are struggling with, wait, what do I do with the extra dollar? Do I put it against this kind of debt? Assuming it's not problem debt, right? Do I put it against debt? Do I put it in emergency savings? Do I put it in retirement savings? And I feel like we're getting to the point with a combination of machine learning and or AI and or open banking where you can imagine a little bot that just does the right thing for you, whatever that right next thing is.
Absolutely. So, we work with a number of different partners, customer businesses who do very similar things. So, companies like Plend who are using automated open banking payments to help people pay down debt. Businesses like new to help people, save for a house for the first time. I think the next level, Karen, as you're introducing there, is how do I set up my account to optimize between those two things, for example. And I think the use of both machine learning, AI, and open banking powered both data and payments is critical to that and super exciting.
No, I totally agree. And I think it's like, when we sort of talk about it, I guess in this context, it's easy to be optimistic. I guess, Neil, I'm going to give you the final word. If we go back to, I suppose, that initial question around the sort of like taboo that sort of currently, I suppose, surrounds debt, what are your thoughts just in terms of how we sort of break that taboo in terms of how we move forward?
Certainly here in the UK, we need to work hard with the regulators. So let's take some examples: council tax and car parking fines, unregulated, I'll use air quotes again, and owned by the government, but the association with the behaviours in that territory, let's say, and the regulated parts of the sector, from a customer's mindset, they just see the same thing. So it goes back to this: how do you improve and increase trust in our part of the sector, so that ultimately the credit cycle works better? I'll finish with a little bit of an example. So going back to Karen's point around who are these guys, I've never heard of them. We wanted to build a brand that was, dare I say, a little bit loud and proud over the years, and we're the first in the UK in our sector to do TV advertising. We did a big A/B test where we took a certain region in the UK, and we saw increased engagement as a result of saturating that region with marketing. So there was that inherent belief from myself, which is, like any brand that you buy from, if you see it on TV, you think they're big, they're big, you trust them. And we've proven that here in the UK. And it's how do you get the brands, not just ourselves, the rest of our competitors in the UK, coming out from below the radar and being mistrusted and having the huge amount of stigma associated with engaging with them, to help customers get back into the credit cycle.
Yeah, that's such a great point, I think, to close on. Like, problem debt it happens. It's something that I suspect most people experience at some point or another. It shouldn't be dealt with in the shadows, because that just encourages bad practices. It should be out there, and it should be engaging with customers, like you said, Neil, in a way that actually builds trust over time, right? So yeah, look, I think an excellent way to end. So that does wrap up today's discussion. I will say to all my guests, thank you so much for joining me. Let's go around the virtual room. I'll just ask you guys, where can people find out more about you and your company? So Neil, let's start with you.
Good old LinkedIn. If anyone's got any questions or wants to bat some ideas around, and then Lowell.com for our corporate site, and .co.uk for how we engage with our customers.
Lovely. Thanks, Neil. Siamac?
You can find out more about GoCardless at GoCardless.com, and you can check out the GoCardless LinkedIn page. And as for me, you can probably find me best on something like Twitter, so at Siamac, SIAMAC. Feel free to talk to me about payments, fintech, debt, history, bonus points if you can combine them all together. Looking forward to it.
I love the topic list. That's great. All right, and Karen, how about you?
Yeah, you can learn more about the Aspen Institute at aspeninstitute.org. There is an Aspen Institute UK in London, for what it's worth, my friends. I'm on LinkedIn at Karen Biddle Andres. And I would also say I would love to meet any of our British guests. I'll be spending the fall in London, actually, with my husband's sabbatical. He's a professor. So would love to meet up and talk debt collection, emergency savings, retirement savings, anything on the balance sheet, especially for vulnerable households.
Excellent. That's awesome. And as for me, you can find me at Ross Gallagher 07. And thank you for listening. If you like what you've heard, please do subscribe to our podcast. Don't forget to leave us a review. It really does help us to make the show better, and it also helps other people to find it. As always, if you'd like to join the conversation, find us on social media. Just search for 11FS or Fintech Insider, or email podcasts@11fs.com. Thank you very much, and goodbye.